Hello and welcome to Car Dealer Live. I'm James Bagger. I'm the editor of Car Dealer magazine, and today I'm delighted to be chatting to Robert Forrester, the CEO of listed dealer group Vertu Motors. Good morning, Robert.
Good morning, James.
Thank you very much for joining us on this important day for you. This morning, Robert's unveiled results for the first half of the year, showed revenue up just shy of £2 billion, an impressive profit of 28.2 million. The full results are available on our website, cardealermagazine.co.uk now. But for now, let's chat to Robert on the details. Robert, thank you for giving up your time on a busy morning, I'm sure. Some impressive numbers in there. Talk me through your highlights.
Well, I think there's quite a lot to be pleased about. This was clearly a more difficult period than the year before, when I think I said on your podcast, Kermit the Frog could have sold used cars profitably last year, and did. Whereas now it's harder work. We've got more headwinds, and there's more headwinds I suspect to come. However, we have hit the 2 billion turnover level in the first half, which I think actually puts us fourth place in the rankings on revenue. Revenue is not everything, but it's indicative. And I think we're shy of 16 years in business, and I think to get to fourth place in the sector rankings is good. Solid profit delivery. Obviously, profits as expected, less than last year, but probably stronger than we envisaged. I think I called the market a bit wrong, really. I expected new car supply to have got better. I expected used vehicle prices probably to have been a little bit more under pressure because of the new vehicle supply coming through, and none of that really happened. So I think that helped margins, which is why the numbers are up. And we've said that our full year numbers will be ahead of market expectations, which is always a good thing. So the analysts have this morning upgraded, and due to the more liberal free market government that we've now temporarily got, they actually upgraded the following years because of the reversal of corporation tax, actually, which is interesting. So it's a sort of 15% upgrade in out years. We've got further growth in the pipeline, a lot of multi-franchising going on. We've got a new big operation opening in Harlow next couple of weeks, with Vauxhall and Citroën being added into Peugeot in Harlow. So a lot more multi-franchising in the pipeline, and a good pipeline of acquisitions. I think, people are getting their mind around, do they want to be an agency? Have they had a good time? Is it going to get any better? And I think the market in acquisitions is probably coming through, and I think the manufacturers have been quite active on the pitch as well. So I think we're quite optimistic really about all that. We grew market share in every segment, which I'm really pleased about, actually. So our retail market share was up, but particularly fleet was up, and we've done a good job in growing supply into the public sector for salary sacrifice EV schemes. There's a lot more potential up there in taking share, but we substantially increased share. But probably the most standout number in share terms was we hit 6% of the new van market, up from 5%. We've said for many years that we're into vans in a big way, and we did a good job on vans. 6% of bus makers, I would imagine, the top player in vans in the UK. So I think that was good. The financial strength of the business is pretty powerful, actually. We've got tangible net assets of 244 million quid, 71 pence a share. We've got net cash, including used car stocking loans, and probably 100 million plus to spend if and when we wanted to. So we feel quite comfortable on that. And the whole digitalization piece is still powering through, including after sales, actually. So we are planning the rollout of online and self-service check-in in service departments over the next 12 months, which I'm very excited about. Actually, it looks absolutely super. And then we've got, for example, in used cars, we've now got the same part exchange price on the web as in the dealerships. So complete transparency. That's quite radical.
Definitely.
3 years ago, that wasn't going to happen, but we've got it through, and it's working well for us. So there's lots of things on the digitalization front that we can be pleased about. Is life easy? No. Have we had to have meetings and meetings about energy strategy? Yes. We've got a whole page in our presentation on energy strategy. We're going to invest 3 million in solar panels in 46 dealerships, 1.5 million additional LED investment for fairly obvious reasons. And our aim within 12 months is to get 50% of our energy off the grid. We've given a lot of thought to this. It's been a big move. We are running the business on a long-term basis, and we have to make long-term decisions like that.
Robert, there's lots to unpack there, but just in terms of some detail on a few of those points you raised. I mean, firstly, those increased new car margins have been enjoyed by dealers this year. I mean, we saw in Pendragon's numbers that their new car profitability was up nearly £1,000. How long do you think this is going to continue?
Well, the order bank's there with strong margins in. In my opinion, order to take is down on new cars for a variety of reasons: consumer confidence, higher finance rates. I mean, I saw some manufacturer finance rates 9.9%. Really interesting. Exchange rates, don't know where the hell that's going to end up, but I mean, that could put pressure on price. So I suspect we're going to see not so much robust demand. Supply side is a mystery to us all, really, isn't it? Because people can't tell me within a week what's coming, never mind what's coming in 6 months. But I think we're working on a fairly good assumption that, it will normalise. Now, I don't think normalise is a 2.5 million market, by the way, but it will get easier on supply, which will make used car supply easier, might lead to slightly more depreciation, but I think it's fairly robust outlook for used car supply, pricing, albeit where's demand. And we did see some weakness in used car demand in September. So I think margins will be okay, actually, certainly in the short term. I think what the impact of agency will be on that, I'm quite bullish on that, if I'm honest, at the moment, but proof will be in the eating.
I'd like to come on to that agency in a moment. I mean, one of the things that is still impacting the automotive market quite heavily is that new car supplies, and it's the new car production. I mean, yesterday there was a report by S&P Global, you may have seen, that they think European automotive output could actually be cut by 15% this winter because of those gas shortages.
Yeah, I'm sure. I mean, that's obvious. That's an obvious problem, isn't it?
Yeah.
And you can come up with lots and lots of problems, by the way. I mean, Taiwan invasion by China, further expansion of the war in the east of Europe, exchange rate problems, financial instability at a global level. I mean, you can go on and on and on, and the answer is we have no idea.
It must be incredibly hard to predict.
There's no point predicting it.
Yeah.
There's little merit in. It's a bit like predicting, what the weather's going to be like in 6 months' time. It's a pretty pointless exercise.
Robert, you've always got an interesting take on how the country's led. What were your thoughts on the recent mini budget and the fallout we've seen since?
Personally, I actually thought it was the best budget in 40 years. I remember being at university and attending a lot of Institute of Economic Affairs seminars. It's in tune with my belief that we should have a high growth, low tax, dynamic, entrepreneur-led economy. From a leadership standpoint, it's diabolical. I mean, I have no idea. If I left and he appointed a new chief executive and he stood up in front of all the general managers and outlined a new strategy for the group, and then 2 weeks later decided, actually, it wasn't the right thing, I'm going to do something else, everyone would be scratching their heads thinking, well, this bloke's an absolute waste of space. And I think we're in a mess. Leadership-wise, and that's not a party political comment. I'm not a member of a political party. It's just leadership. Stand back and look at leadership, and we haven't got clear leadership. Our democracy is not functioning well. Albeit, you have to say, we've got a bad deck of cards. And actually you look at inflation is 17% in the Netherlands. I mean, the Brexit must have had a massive impact on the Netherlands, but everything's Brexit fault. But I mean, given the fact we've got major economic woes in Europe, the world's complicated and the world isn't particularly nice. And being a leader at this juncture is quite difficult.
It must be incredibly hard to predict what's going to happen with those inflationary pressures that we're all facing.
In fairness, economically, and I may be completely wrong, and you should dig this video out when you prove that I'm wrong. And forecasting is a mess generally, isn't it? I'm actually quite optimistic. I think inflation will go down significantly next year. You've already seen fuel costs coming down. This is presupposing we don't have massive wars and things, but I think inflation will come down quite a lot. And I think we may see lower economic activity, which will drive inflation down as well. We might get away with not having extortionately high interest rates. I think the Bank of England has been very slow on the interest rate front, personally, albeit it's damaging for people's lives and businesses, but you're best getting the bad news out of the way first rather than creating massive problems. So I'm actually quite optimistic. We've got very high employment levels. We actually are not in recession. Let's remember, we are not in recession. We have got a government who at least wants growth rather than manage slow decline and stagflation, which is an improvement on the last lot. The big problem we've got in the country, and I think this is going to lead to higher interest rates in the long term, is government debt.
Robert, if you read the papers, though, I mean,
I don't.
Yeah,
it's honest answer.
Many people do, and there's a lot of doom and gloom in those papers.
And that's because it sells papers, James. It's like COVID. Everything's doom and gloom. We're all going to die. We didn't all die.
But there's a knock-on impact on the cost of living. There are those increasing interest rates. What do you think? I mean, you're obviously, and always are, very optimistic. What do you think that's going to mean for car sales?
Well, car sales could come under some pressure. Mortgage rates eking into real wages, higher finance costs leading to higher monthly payments. So I think we're in for some potentially interesting times. I think everybody knows that. But if you look beyond the next 12 months, assuming there's no left field events, I think we should be pretty optimistic. Our economy, I think, is in broadly better shape than most other people's. I think we could have a massive Eurozone crisis easily, actually. I mean, that looks very ropey. I mean, there were rumours at the weekend about Credit Suisse going bust and all kinds of things. And none of these are great events, actually. And I don't look at them with any great glee, the fact they're on continental Europe. I think our fundamental issue is with the COVID furlough scheme and with the energy bailout, and actually the fact that we seem to think we can forever borrow money off the Chinese and never pay it back, we have got some pretty nasty issues to deal with on government debt, which are going to be a problem. And all we want as business people from governments is stability. Now, it's not all the government's fault. They can't stop wars necessarily. We just want economic stability, low inflation, stable interest rates, high employment, and the government finally get out of the way. I fundamentally believe governments are incompetent and they should leave the private sector to get out there, make money, pay tax to fund the stuff that needs to be done by the government. Anyway, that's me. So,
well, we've talked about your rising costs, and you've mentioned that you've come up with a plan for those energy prices.
Well, in fairness to the government have significantly helped our H2 with the government assistance on electricity rates. That has made a big difference.
And your deal was ending last week, wasn't it?
Yeah. Well, our deal ended last week. Yeah, just brilliant timing. Actually, brilliant timing. Actually, our gas actually is out quite a long way, so that's good. So I think the energy action was good. The reduction in national insurance, big help for British business and our sector. We employ a lot of people, so that's good. But clearly, the big thing that worries me is national minimum wage increase next April. That could be quite costly. I understand why they might want to do it. Cost of living for some of the poorer members of society, I get that. Actually, I think morally, I can understand it. Economically, it's going to be quite tricky. And the differential issue of it capturing more and more people within the workforce, then what do you do? And we are going to have to look at that over the next few months as we get into business planning.
I mean, are you facing pressures from employees impacted by that rise in inflation for wage increases?
I wouldn't say so. I think nobody's written to me. I now get a deluge of letters. Yes. But I think they know that we'll take sensible decisions. We took a lot of action last year. You can see that in our bigger cost base. But there is no magic money tree where we can keep going. And if we can't charge the customers more, then I can't afford to pay anymore, really, can I? So we're not in extraordinary profit territory. We're a £2 billion business that made 28 in the first half that made £28 million. Not a massive amount of money, is it? So I think there are pressures on British business, and there'll be pressures on us, and I think that's one of the key judgments we'll have to make. And we've got to protect our workforce, and we've got to make sure we've got the right people in place. It's a market, isn't it? Now, on that side, actually, we've got 100 less vacancies we had 6 months ago. We've got far more technicians in place than we had 6 months ago. So that's positive.
So yeah, I saw you mentioned in your results that you've managed to fill some of those. Are you actually finding the right staff across the business, or is there still a difficulty getting?
I think there's still a bit of pressure, but a lot less pressure than there was. We've taken 120 customer service apprentices on. We've taken 100 light vehicle technician apprentices. I think our vacancies are around about 6%. I think if we ran at 5, I think that's probably normal, so a touch above normal. But we have to be cognizant that people are, going to face pressures at home and may look for alternatives that pay more. And to be honest, that's rational behaviour. We have to reflect that.
Robert, who's better at selling cars, dealers or manufacturers?
Manufacturers don't sell cars, and even other agency manufacturers won't sell cars.
So talk to me about how these agency sales are going to work. I mean, Mercedes is coming around the corner, isn't it, in January?
Yeah, and I think they've done a great job actually in getting organised. Mercedes, I'm very impressed both with the fact that our teams have engaged very well with the manufacturer. We've got a change management specialist from our business in there, working very closely. I had a review last week. I'm pleased with where we've got to on that. The proof is in the eating, but I think everyone's putting their best foot forward. And the fundamental thing is, the dealers will be selling the bulk of the cars, and there'll be some online activity, but online activity is not in any way large, important. It just isn't. The bulk of activity is still dealer led, really. I mean, people use the internet. I mean, I read a very interesting piece from Auto Trader last week that 60% of used car buyers come onto the dealerships without actually having previously contacted us. Now, nobody would believe that, actually, but that is an Auto Trader stat. And if I look at my data on, we split our opportunity to do business between walk-ins, phone-ins, internet, and appointments. Walk-ins are tremendously important. Walk-ins year on year, despite the fact we've got lower volumes, are actually up year on year. Internet's massively down.
So you're happy with the way that Mercedes has structured this agency sales agreement?
Yeah.
Can you tell us how it's going to work? I mean, there's many different options.
Yeah, everything is the same, apart from the fact the manufacturer invoices the customer. It's my brief summary.
As agency sales roll out, I mean, you've already mentioned about the opportunity for acquisitions as a result of it. Clearly, there's a lot of dealers out there that don't like agency sales or what's coming down the road. I mean, what are your thoughts on agency in general? Is it a good thing for the industry?
I don't see it as that much of a radical change. The fundamental bits for retailers is, what is the economic proposition? Forget what the legal form is. What's the economic proposition? How much money do we get? I mean, we are legendary mercenaries, aren't we? How much money am I getting? And let's face it, manufacturers control today, under the traditional block exemption wholesale way of working, our new car margin. If they flood the market and they stand the targets too high, and we have to race to get customers and sell cars at a loss and to get a volume bonus and then pre-reg and have to use our volume bonus to subsidize the pre-reg, which I have to say I am delighted is not part of my life now, because that was deeply depressing as an exercise.
Yeah.
How not to make money. Then agency takes all that away. You've got none of that. What you do have is you have a handling fee. And the question is, how high is the handling fee versus how much cost are we not going to have, because we've got no stock, no storage charges, no marketing. So we have to see how it is. I'm not saying that agency will be a smooth run. I think it puts a lot of responsibility on the manufacturers to get things right. Marketing, digitalization, systems, compliance. And I do have a worry that the people that are needed in the manufacturers actually don't exist. I mean, we have a devil's own job recruiting marketeers. I mean, if you go and say, well, manufacturers are going to have 100 digital marketeers, I have no idea where they're coming from. So I think there are some practical challenges, but conceptually, this is not something I am lying away in bed at night worrying about. This is just not.
So are the manufacturers listening to you and other dealers when they're putting these agency agreements together, or is it a case of it's what they say goes?
No, I think there's been some robust kickback. with all the manufacturers in terms of, and some manufacturers are going early and some are going late. And some of the manufacturers are going late because they want to see how it goes. Because who knows if it's the right thing to do or not. I mean, McKinsey's think it's the right thing to do, which is normally indicative that it isn't.
And if you're interested, if the offer, the agency sales offer from a manufacturer is something you're not interested in, would it be a case of you ending the agreement with that franchise?
Oh, yes, I mean, it's a free market. Obviously. If somebody came to me and said, we're going to take no cost out and you've got a 1% handling fee, make all your money out of used cars and after sales, I'd be going, what are the refranchising opportunities? Haven't been presented with that scenario yet, because actually the manufacturers realise that physical capability and bricks and mortar are vitally important, because online is currently, and I suspect for a long time, if not forever, not relevant. Actually, pure online retailing, I don't think is important. I mean, I think, again, we sold 500 used cars purely online. It's like Tiddlywinks versus the Premier League. It's just not relevant. And actually, my focus is not on pure online retailing used cars. Our focus is on digitalization and reservation fees, and getting the customer and processing them through however the customer wants to be processed to buy a car. So we haven't lost any manufacturers due to agency, and I'm not envisaging that that's a likely scenario, on the grounds that presumably the manufacturers want us to operate their dealerships, and if they don't, then they're going to have to come up with a lot of capital to replace them. You can't do it without physical bricks.
And Robert, I'd like to touch on that acquisition pipeline that you mentioned in your report. There was some strong hints that there's some deals to come. I mean, what can you tell me about that? Nothing. Thanks.
The only thing I'd say is, I mean, I think when I spoke to you last year, we were on the back of a bumper year. The risk was either people would take the profits and cash and not sell the businesses, or demand such, multiples based on the high profits. And then we explicitly said that is just not the game we're in. Thanks very much. I do fully intend to run this business for another 15 years. And I don't want to regret acquisitions where I've overpaid. So I think the situation is quite different now. You've got agency, you've got cost pressures, you've got technological pressures, you've absolutely got benefits of scale, which are evident to anyone. Arnold Clark is a supremely brilliant business because you've got scale and brilliant management and brilliant digitalization and all this stuff, but it's got scale, and you need scale, which is why it's important that we're now the fourth largest. We need to be in the top three, really, I would say. So having scale is important, and I think people who are running smaller businesses I just don't know how to do it. I mean, how do they do cyber security? I've got 4 people in cyber security, and it's really important because I don't want to wake up one morning to find I've got no systems.
No, true.
And that's just the microcosm element. But think of used car purchasing, digital, analytics, relationships with providers. I wouldn't want to run a small business.
So, would you like to be number 1 in the UK in terms of size?
I'm not particularly bothered about that. I think it's quite important we're in the top 3. And we might not get in the top 3, but as long as we've got scale, then I think that's important. I need the base of dealerships to allow us to be a part of the future, whereby we can invest in training, brands, and just having more dealerships helps.
Because you've already got 160, haven't you? I mean, how many more do you need to get that scale that you talk of?
Oh, I don't know. I always wanted 400.
400.
I always said that I wanted 400. By the way, I don't think we'll get 400 as it happens, but I set out in 2006 with 400 in my head. I suspect I will spectacularly fail.
So you'll be happy when you get to 400, and then you can resign.
Well, I think the next thing is get to 200, isn't it? That's not stupid. That's it.
I mean, there's some big offers out there, isn't there? There's some big opportunities out there. I mean, I hear that Helston garages might be on the table.
I can't comment on specifics. I think, to be honest, if you rang anybody up and offered them a good price for the business, they'd probably think about it currently, wouldn't they? With the mayhem that's out in the world, to be honest. There's plenty to do in cars, and in bikes. I mean, we are putting quite a bit of effort into bikes at the moment as well.
And Robert, just finally, I'm always very interested to hear who you admire in business. I mean, who do you really admire in the automotive industry outside your own business?
Well, I think Carlos Tavares is a master of shareholder value and runs a very, very tight business. I actually am reading a biography of Elon Musk at the moment, which is really quite interesting because he is an exceptional individual, I think. I think when we're all dead in 2125, when people write the history of our period of the first half of the 21st century, Elon Musk will be in the top 5 people. I have absolutely no doubt about it. And I think in terms of the UK sector, you know, we've got some strong people, haven't we? I mean, you can't decry what Das Gupta did at Marshalls. He took a provincial, in my opinion, failing player and transformed it into a powerhouse of automotive retail. And I think no one will be able to take that away from him. And actually, you look at what Eddie Hawthorne and the Arnold Clark team have achieved over many, many, many years, and it is absolutely exceptional. They are the only competitor I worry about is Arnold Clark. You don't need to worry about anybody else. Only worry about Arnold Clark.
They're quite a juggernaut, aren't they?
They are. We just need to make sure we're not under their wheels.
Robert, thank you very much indeed for joining me this morning. It's been a pleasure as always.
Thank you, James.
Super. That's Robert Forrester, CEO of Vertu Motors there. So to read Robert's results in full, you can visit our website and search for Vertu Motors at the top of the page. It's cardealermagazine.co.uk. Thanks for joining me. I'll see you next time. Goodbye.